Good evening. Ira Epstein of Linn & Associates with your evening wrap-up for your metal markets, and this is for Thursday, the 8th of April, 2021, about 5:40 p.m. Central Time. Well, you can see the stock markets extending the rally. We had a beautiful rally in the gold and the silver today. They're giving back some, and that's not to be unexpected. I think it would make some sense. The question is this a real breakout or not? That's going to be what everybody looks at. In the meantime, you can see how the dollar's come down hard. The euro has gotten back over the 119 level. That helps. You're fairly stable right now in the energy part, and you've kicked up in what? The futures market on interest rates, which means we continue to drop back ever so much in the 10-year note and some of the others. And I've heard people say, well, the market's overdone, that's it. You probably built too much into it. I don't know. I know that the market is getting expensive in stocks individually, and the market won't care about it. I've heard that story forever. So I think you're in right now what? You're in the COVID situation where America's coming out of the COVID problem. Other parts of the world are very much mired in it, but we trade America. And as Americans, we look in pretty good shape, and you're seeing those numbers every day. Now, for the week so far, we're up $30 in the gold, which is up 1.75%. It could, for the first time, change this pattern where we've been making lower highs, and if we were to close with a good gain tomorrow, we could have, for the first time in a while, a higher high, higher low, ending this level of the downtrend in the market. We got up to a zone that I told you the market would need to get up to break out, and that's right here. This upper area. Well, you're in it, and you can see you're in it right through there. So that's what stopped the market. I'm not the only one that is seeing this, but you turned the trend of the market. So for the very first time, and I don't know how long, you have a pattern of higher lows, higher highs. You're over the 18-day average of closes. The support is back at that number if it wanted to drop to it. The resistance point in the market will be the upper Bollinger Band, and you tell me the number you got to today. Take a look at this. If you haven't taken my Bollinger Band course, go to our website, take a look at the video I created about it. It's under the word education, and you decide for yourself if that makes sense. I'm going to show you things in Bollinger Bands I don't think you've seen elsewhere. But that would be where I would think the pros were taking money off the table. That doesn't mean the trend isn't up. It simply means that you're no longer testing the downside. You've decided to come back, and for the first time in, probably just about this year, you're testing the upside. And what else did we talk about? We were talking about all week long that we'd been in a decline, and suddenly we're getting this sideways action. Could it be a base? Well, this is the first test to the upside. It's too soon to say it is. I wish I could and just would tell you to buy. But it certainly takes me out of the bearishness of the market, and I think there's a better chance of up than down. Could you come back and make traders crazy? Remember that phrase I used, this call your psychiatrist, where you challenge the lower band, you go nowhere, you challenge the upper band, you go nowhere, and you just end up in that sideways action? If you don't think I'm aware of that, you'd be sadly mistaken. In terms of overbought, oversold, you're overbought. I would feel so much better if this market would embed, but up here, first challenge of the upper Bollinger Band, I think the pros took money off the table today. When we take a look next at the gold-silver ratio, we've been looking for a pullback, at least I have, to talk about, back towards that 18-day average. We're getting it right now. Silver, and we had talked about this earlier in the week. I said, as the market came back up, if you'll recall, when we were falling, we were challenging the lower Bollinger Band and the 200-day average in an oversold condition. The market got a reversal. When the market comes up, the first resistance point is typically what the support point was on the way down. Doesn't have to be, but it's very often that average, and that's what you did. If you extend there, I know that I said to you, you'd then have another layer here at the 18 and the 100-day average that you'd have to fight through if the market could get itself going. At this day, and this was Tuesday, so it's not too far ago, right? You had negated the downtrend. You now have a higher high and low. And in my newsletter, I know that I started telling people, and in the morning subscribers, well, the market has now lost that break pattern that it had. So now the question is, does it want to try to rally? You fell back yesterday. Today you make a move to the 18-day average, and tonight, let's see, you're backing away from it. So just what I said, I think, is taking place. Do I think you're attracting buyers here? I do. I think that you're going to see the buyers attack the market, if they could, in the 25-32.5 zone. I think that they'll watch how the support comes in there. They got to give it some breath. If 24.89.5 is taken out, you lose this uptrend. Now, if the market can consolidate at that number and move up, well, then you're looking at 25.75, about 40 cents higher than that. And if that gave ground, then wherever that Bollinger Band comes in could be the next upside. In the copper market, you're continuing on this sideways pattern. You're just locked into that. We have an uptrend. It hasn't challenged an upper Bollinger Band since back here at the end of February, but it really went sideways. This is a consolidation of all the gain that it made. Now the question is, was it too much gain, or is the market ready to level, break out to the upside if you get the U.S. stocks going, interest rates stay down, the dollar down? That is what the market's going to be watching. When we come to the platinum market, you're in an uptrend. As I told you, I thought the pros would take money off the market again. First time they'd hit an upper Bollinger Band right there in an uptrend. That's the target. I showed this in my course, and that's where I think they're going to come out. Now the question is, will they want to come back in? I'm not convinced they do, because you're overbought right here. They're certainly not bearish. I think they're waiting for either to embed or a correction in the market. Does that mean you can't go without either of those happening? Of course it does. Are you even thinking the short side? Not at all. It's a question of how to get long under the right circumstances, I view it. In the palladium market, with today's action, you now have higher lows, higher highs. You've got a little divergence because momentum has been pointing down, but it got away from being overbought. If we take a look, you can see this market was overbought 2 days ago, and that was on Tuesday. Wednesday, the market got both numbers out of the 70 level, so completely not overbought there, and today a little better. Now, what could take traders out? Well, if you got under 25.85. However, I think the pros will say they can defend that. That's only a $15 risk. And if they can get the market up and over 26.99, wherever that upper Bollinger Band is, I think that'll be one of their targets. In the dollar index, frankly, I thought the market was going to do a better job of trying to just hang at the 18-day average. It's hit it each day. For the past 3 days in a row, you've hit that number. So it's doing its job of trying to figure out from that 18-day average what to do. But the tip-off is that momentum is pointing down, the trend is down, that's going to be resistance on the way up. If this market lets go and wants to really confuse traders, you make a break towards the lower Bollinger Band and the 100-day average, and that's going to kick other markets up. Why? Items that are then priced in the dollar come down. You do realize, like the euro is 40% of the dollar weight, so that's very important. In Ethereum, you're overbought, or are you? All right, so we have both numbers over 80, but we can't include today, Friday. Both were over 80 on Thursday, both over 80 on Wednesday, both over 80 on Tuesday. Therefore, you have an embedded reading, which tells me the trade is now, the traders, I think, are buying the market until the red line closes under 79, again looking for the upper Bollinger Band in there. So you put this all together and you try to come up with ideas. And, you know, one of the things that I try to offer people like you is maybe you want to take a look at my different videos, a free look. Take a look at everything I've got, not my courses. That's going to be different. But if you'd like a free 2-week trial to my Spider ETF or my A futures video, you've got it. My written commentaries. I write like it's a Reader's Digest. I'm not interested in writing books. I am interested in writing one page with the headlines, the pointers, a summary, and moving on. And each night I try to cover something a bit different. But the real meat of what I now do, I'm part of this new generation. I may not look it with my age, but videos are where things are at. So if you'd like to give this a try, simply go to our website under free offers. That's where everything is. We'll put you on. You'll get 2 weeks trial to this, and that's 10 business days that I'll make that available for you. Go right there. If you've tried this recently before, that offer won't work for you. I'm Ira Epstein. You have a great day, and I will talk to you tomorrow.